Most people actually lose money in real estate simply because they bought a good looking deal without doing the research. And as you already know, in real estate, guesswork is very expensive. In this video, I'm walking you through 8 smart steps that you can use to research any rental property you want to buy like a professional, so you can build wealth without stress, without chaos, and with no surprises. So I walk you through step by step how to pick a profitable market, how to run the numbers that actually matters, and the exact step I give my first time investors so they don't have to lose money on a daily basis. I'm sharing all that with you and more. And this is the best part. You don't need 10 rental property. With just solid 3 to 5 properties, you are done for life. So I actually had a client who found a very good looking duplex last year from Zillow. Everything looks great, the rent looks solid, and she closed on the property. This is before she met me in 2023. Because of lack of proper guidance, she skipped 2 key steps in the research phase, and you know what happened? She bought in a flood zone. And because she bought in a flood zone, her insurance tripled overnight. So what looks like a $500 monthly cash flow became a huge loss and headache for her overnight, and she completely regretted her action. So this is the step 1, and very, very important one. You need to define your investment goal and your criteria. Are you looking for cash flow, or are you looking for appreciation, or you're looking for a combination of cash flow and appreciation? Your strategy determines what and where to buy. If you get this one wrong, everything else will be wrong. If you want cash flow, now you have to look into markets like Houston, Texas, your Sunnyside, your San Antonio, your Cleveland, even your Birmingham, Alabama, your Gary, Indiana, your Columbus, Ohio, Phoenix, Arizona, Austin, Texas, Nashville, Tennessee. Now, if you want both of appreciation and cash flow, of course, you can't go wrong buying in Houston, especially in the Houston suburb like your Katy, Cypress, Richmond, Conroe, and Rosenberg. You can't go wrong with these cities. So once you know the outcome, then you can reverse engineer everything from there. That is, you can now pick a market and go all in that market. And that takes me to my step number 2. You want to choose the right market for your strategy, for your time, for your risk tolerance. So you want to make sure you look for the population and job growth. You can use US Census, you can use BLS.com. You also want to make sure it's a landlord-friendly state like Texas. You want to buy in a place with a higher rent to price ratio. You want to buy in a place without HOA or with very, very little HOA fee every month and 0 restriction on rental property. You can use websites or tools like your niche.com, your greatschools.org for your research. You can also use msc.fema.gov to make sure you are not buying in a flood zone like my client I mentioned to you in the past. You also want to use citydata.com to check the demographics of the area. Use Rentometer and Zillow to see what they're going to rent for. And you can also use Zillow and Redfin to keep track of the market trends, so that way you have your hand in the market. You want to know the market you are investing front and back, because wealth is made in the neighborhood, not in the state. You want to zoom in into that neighborhood, even up to the street where you are buying the property. If you want to look for low crime, and you can use spot crime or Trulia maps to be able to find out this. You can also use your niche.com for overall neighborhood ratings. You want to buy in a place that is very close to jobs, to hospitals, to schools, to major highways, and other amenities that will be attracting tenants to your property. Now, you want to also have an understanding of the local rental demand. You can ask your investor agent for this, or your property manager if you have one. But if you don't have one, your agent can definitely provide all that resources to you. So you want to avoid streets with boarded up houses, holder homes, fixer-upper, HOA restrictions on rental property. And this takes me to my step number 4 in this process, which is run the numbers. You want to make sure you clearly understand the number. If your numbers are off, everything else, it's irrelevant. So please make sure you don't skip this step. Run the numbers carefully. If you want to learn how to analyze property, comment the word analysis, and I will send you my spreadsheet that will allow you to analyze property in as little as 2 minutes. You want to focus on key metrics like your cash flow, which ensures that rental income exceeds your expenses. You want to focus on cap rate, which is your net operating income divided by the purchase price. You also want to focus on cash return, which is your annual pre-tax cash flow divided by your total cash investors. This is what we call cash on cash return. Now, I do recommend you use tools like your dealcheck.io to crunch your numbers in seconds. There's a lot of tools out there. Bigger Pockets also have a rental calculator. I also mentioned you can comment the word analysis. I will send you my Excel spreadsheet. I recommend you don't guess it, don't round it up, get it down to the dollar. If it doesn't make sense, move on to the next one. I will show you one deciding factor that separates amateur buyers from real investors, and it is not about the money. Who you choose to guide you through this process really matters. And that takes me to my step number 5, which is you want to hire an experienced rockstar investor agent. A regular agent will help you find a house, which is where it stops, but an investor agent will help you build generational wealth that will pay you years and years again. So here is what to look for when you're looking to hire that investor agent. The big one for me is make sure they own rental property themselves, and I put it into a summary of what I call on fire agent. On fire means they are organized, they are very well networked, they focus on you, or they keep you focused. They are investor or investment savvy, which is very key. And they are also what? They are very responsive as well when it comes to answering your call, giving you what you need, showing you the property, and actually submitting offer for you quickly, because if you delay in submitting an offer, you might lose that property eventually. And the last one is they have to be experienced. I do not recommend you work with a new investor agent that is just getting their license, because if they don't have the experience, you probably will not be getting the best deal, or you might miss some opportunity that you should have taken advantage of. So if you're in Texas, DM me on Instagram at Wale_Lawal, and I will be able to work with you. But if you are not in Texas, still send me a DM and I will connect you with a rockstar investor agent in your local market. If you are finding value in this video, please do me a favor. Click on that subscribe button and click on the notification bell so I can let you know the next time I have a new video. And that takes me to my step number 6, which is you want to make the right offer. There is no amount of property you analyze. If you never make an offer, you're not going to get it. And a good deal is made when you buy, not when you sell. You can negotiate the deal based on the inspection issue you found, the seller motivation, the days on the market, or any other issue you and your agent identify during your due diligence period. You can also use that to negotiate. And remember to inform your agent if they are very good at what they do. This is what they will do as a default. You want to include an inspection, appraisal, financing contingency, or even survey contingency into your offer. So if any of these doesn't go well, you can easily terminate that purchase and move on to the next one. Now, you can also ask the seller for a seller credit to cover your closing costs if you are looking to put as little as money possible. Remember, if you don't ask, you don't get it. Now, you also have to be firm on your offer, on your numbers. If you think, hey, this is my highest and it's not working out and the seller is not being flexible, move on to the next one. So you want to make sure you're not chasing deals that will not be profitable or something that you will regret eventually. And this takes me to my step number 7, which is you want to inspect the property. You never skip home inspection. This is the biggest things I've seen people missing all the time. The home inspection report will help you to uncover a lot of things you cannot see with your eyes. Talk about the foundation issue, roof issue, mold issue, plumbing issue, HVAC issue, even the big one, electrical issues that are very common in older homes. So that $400 that you are spending on home inspection could save you $20,000, $40,000, even $50,000 a few years down the line. And this takes me to my step number 8, which is the last one. You want to close on that property successfully, then execute your management plan. Closing is not the end, it's just the beginning of your rental property investment journey. So before you close, you should already have a plan in place. Map out the plan, how you want to manage your rental property. Do you want to self-manage or you want to hire a property manager? You should have decided on this at the beginning of your purchase. Also, you want to know how do you going to be screening tenants. You want to use a software like Turbo Tenant, Avail, or Hemlin.com, which is what I use. You want to have your maintenance plan or your contractor lined up so they can help you start dealing with any issue that may come up when you own that property. And this is why I do recommend you buy new construction or something relatively new if you are just getting started, because if you do that, that will save you tons of headache and it will save you a lot of money on repairs. And as a new investor, you want to limit your risk as much as possible. So side note here is that if you're an out-of-state investor, you're a busy professional, maybe like a medical doctor, accountant, CPA, lawyers, and you just don't have the time, or a busy business person, you might just want to hire a property manager and let them do all the work for you. So here is the bonus tips. Here is what no one actually talks about. Your best data comes from your local investor agent and your property manager. Now, you don't have to necessarily hire them. You can pick their brain a little bit. Don't do it too much. But once you feel that they know what they're doing, please go ahead and commit to working with them. You now have every step-by-step game plan on how to research a rental property market without losing money, sleep, or your sanity. If you want to take the next step, comment the word research in the comment section below, and I will send you my free rental property research checklist that will walk you through step by step what I've discussed here and how to implement it effortlessly. Now, if you're ready to take action or want to buy that property in the next 30 to 60 days, you will see the link to my calendar in the description below. Feel free to jump on my calendar to schedule a call so I can dissect your situation and see how I can hold your hand to help you buy that your first or your next rental property. And thank you so much for watching till the end. Again, if you have not subscribed to the channel, please make sure to hit that subscribe button and click on the notification bell so I can let you know the next time I have a new video. But before you go, I actually want you to watch this video on how to successfully analyze a rental property in 2025, because if you don't analyze the property, you are just guessing, and that might cost you a lot of money and a lot of pain. I will see you in the video. Bye bye.